We have a fantastic session today on nuclear export financing with Omar Ben-Halim, strategy advisor at the Office of the Chief Executive of the U.S. International Development Finance Corporation. It's quite a mouthful. I want to get started with Omar giving just a brief overview of DFC's mandate in general for those in the audience who don't know, and then specifically what DFC is doing on nuclear and why that's a change from the past.
The DFC is the US government's new development finance agency. We have a dual mandate to deliver financing to emerging markets, principally in the global south, but also for energy security reasons in Europe, both for developmental reasons and to fulfill US strategic foreign policy objectives. One of those key objectives that is at the heart of several different threads is climate. And we've managed to scale our climate financing dramatically over the past few years. We were at about $500 million in 2021, and this year that's just passed, we delivered $3.7 billion in climate finance. So that is about 8x in a little over 2 years, which is very exciting. In terms of nuclear specifically, nuclear is a major priority for us. We're looking to support various, in particular, SMR companies in Europe. We've signed numerous letters of interest to provide support and credibility and crowd in momentum and private sector financing. Most recently signing an LOI for $1 billion of coverage with GE, Hitachi, and Orlen Synthos in Poland. So nuclear is a priority for us, and we're very excited to be working on it with our partners.
What are the criteria for a good project that the U.S. is likely to finance? And what is all the work that you need to do in the pre-finance work? What is that you're talking about?
In general, the criteria we look for at DFC at least is we lend only or invest only in private sector projects. So they must be bankable for PPAs, for instance, for independent power producers. We require sovereign guarantees and all the rest of it. Also, as the US government, we have to have very high environmental and social standards because those are some of the values that we hold as a government, and it's also because that is one of our competitive advantages as we work with our partners around the world. One piece that we look at is we very rarely take a lot of technology risk. That's something that with nuclear, we have to take a hard look at because with the coming wave of nuclear investment that will be required to reach net zero, in particular with emerging technologies such as SMRs, we don't have the ability to get the number of reps in that we do with something like solar, where you have physically small technology that you can learn by doing and drive the cost down over time. Even with SMRs, these are much larger facilities and the inherent technology risk is inescapable. The long-term nature of this means that public finance will be required to get this over the hill. So as we look at what are our criteria with respect to nuclear, we maybe have to be a little bit more flexible than we are in other areas of the energy mix. But that's sort of a high-level overview of what we look for.
Is there a TRL that you really can't go below, or is that how you think about it?
We don't think about it in such specific terms. Generally, we look to see that a specific technology has been deployed at commercial scale multiple times, and also, very importantly, that the specific borrower or client who we're working with has a successful track record.
Why is export finance particularly important for nuclear as opposed to other industries?
Nuclear is fundamental itself. We have nuclear driving power in more than 30 countries around the world. It provides 10% of the global power mix. It provides 25% of the clean power mix. And so as we look to ramp the volume of clean power that we have, nuclear is inescapable. And therefore, what Lindsay alludes to is a critical place for us to play. We can't back away from this area of competition because it's difficult. As we look at energy security, which has been a particularly important question since the Russian war in Ukraine, we can see that if we're looking to build energy security without gas, without the same degree of fossil fuel mix that we had prior to the crisis, nuclear is something that we're going to need to really double down on. And therefore, providing that set of standards, providing that financing backing is going to be critical.
We had this question in the audience. Let me go take that.
This is not a criticism of what you do. I think you're doing a wonderful job. But looking at the bigger picture, we're supposed to meet this 2050 goal, which means to electrify all our economies, a little over 2 decades. The question I have, is there enough capital in the world to be able to finance that?
I think that profits, it chases revenue and is generative. So as we can build business cases around this, as we can prove that there's a profitable opportunity here, capital will be attracted to this sector and to the broader energy transition in general. And that is the role of public finance, to leverage the private sector and to prove to the private sector that this is an opportunity, not a cost, not something that we must do, to de-risk the sector and to provide various tools in order to bring the private sector in. And this is something where DFC's range of tools is particularly useful because we have direct equity investments, we have loans that we can provide. But where there are deeper capital markets, especially in geographies like Europe, or those with increasingly strong capital markets like India, we can provide guarantees, we can provide political risk insurance that crowds in private sector capital without replacing it. And so I think the answer is yes, and we have to be very thoughtful about how we scale and sequence the tools that we use as the technology becomes increasingly mature and as the risk falls.
I think both the DFC and the EXIM recently changed the rules to allow financing of nuclear abroad. I have two questions. Have you financed any nuclear projects to date? And what does the financing look like today, for example, for Poland? Because I know they want like 30% co-financing to go ahead with their project, which is an issue with the Westinghouse AP1000 offer.
So we haven't financed nuclear to date. We have been engaged with multiple projects in Romania, in Poland, and further afield as well as South Africa, in order to try and build momentum behind those projects. And we stand ready to finance those projects as and when they come to financial close. So the status of the financing for Poland, Orlen Synthos, GE Hitachi are still working through that project. It just received initial approvals, I believe, but they're still working through that project. And as it comes to FID, we will continue to work them through our process to provide financing.
I want to talk about the international export finance market and if the U.S. is competitive. You were talking about some of the issues that the U.S. export finance has, but when you look at the broad scope of export finance opportunities, how does the U.S. stack up?
Everywhere we go, everywhere we travel, we frequently come across allies and partners who have a range of options in who they go to for financing, in who they go to for technology, in where they source their supplies. And there is a very broad and deep understanding of the value of the diversification of those supply chains, both from a cost point of view, for a security point of view, from a technology risk point of view. That is absolutely what we experience, what we see in the market.
We've been talking a lot about the U.S. and U.S. export finance, but are there ways for the U.S. to work with its allies and partners to make a more competitive offering? Is there something that we can do that is international in terms of the financing?
Well, I think that's a must, not a can do. The scale of these projects requires multiple different parties to come to the table. And again, SMRs are really where DFC is looking as an initial point of engagement. We have an upper limit of $1 billion on the scale of financing or political risk insurance that we can provide, which really limits ability to be tangibly, we're best suited to providing financing to SMRs. Even within that case, we require many parties to come around the table. The regulatory environment that you described, the places where the technology comes from, all require various different expertise from different partners in Japan, in Korea, in Europe to come around the table. So it's really something that we have been cooperating with broadly, and we'll need to continue to do as we move forward.
Thank you all. I wanted to see, are there any final comments?
I don't think so. I think that this is absolute priority for the Biden administration. It's something that we're very excited to get behind and bring our range of tools to bear on. It's something that is going to take time and repetitions, and we cannot expect instant successes in all of our first projects. But as we start to build muscle memory and expertise, both on the financing side as well as on the deployment side of SMRs, this crucial hole in our future energy mix will begin to be filled. So this is enormously exciting, I think, for all of us.
Wonderful. Thank you all so much for joining. Really appreciate the time. So thank you again, and thank you all.